Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome to another exciting week in the market. A few fun things that have been going on this week. DYDX's V4 went live for trading. I've talked about that a bunch in prior Twitter lives. If you're interested, you can check those out. There was a fake XRP filing on Monday that there was going to be an XRP ETF, which caused the price to kind of go straight up and then go back down again. People are actually looking to see if they can press charges against the ones who came up with this fake filing news, since it did move the market significantly. Market has been softening a little since then. We'll see if we're going to continue. Most people don't think we're going to be continuing on a endless upward streak or trajectory. But in the meantime, I got some fun tokens to share with you for the week. So we will dive right in. Okay. So I'm actually going to talk about OKEx to start. So centralized exchange OKEx is following in the footsteps of Coinbase and recently Kraken this week, announcing that they're going to be launching their own L2, which they are building in tandem or in building in partnership with Polygon. We're still kind of seeing if this L2 play is going to work, right? So Coinbase has had base out for a while. They were built on the OP or Optimism OP stack, which is Optimism's framework. That's been very successful, although they haven't had a token. Kraken recently announced that they will also be launching an L2. It seems like these are good ways to kind of get users into kind of into the on-chain world from the off-chain world of these centralized exchanges. Unknown, like I said, though, if we're going to see a lot of these things kind of benefit the exchanges. In Coinbase's case, we haven't necessarily seen like massive revenues flowing from the base blockchain, although they did garner a ton of revenue over the summer with the launch of FriendTech, which was a social fi platform that's seen a ton of copycats since then. But OKEx is, plowing right in. So they, just for context, OKEx is the second largest exchange by market share after Binance. They capture about 24.85% of the market in terms of volume. And they're kind of just like the solid number 2 exchange. They've managed to stay clear of any public regulatory spats compared with Binance and HTX, or what used to be known as Huobi. But they are still kind of less transparent in their operations than, say, a Coinbase, who has their quarterly filings that we can kind of rely on to understand where their business is going, what their revenues look like. So OKB's token is only up 5% on the week based on this news, but they have been up. They are about up almost 40% in the last 30 days. All right, next we're going to talk about Optimism. So Optimism, the layer 2 project, they announced on Monday that Ryan Watkins, who is formerly the president of competing layer 2 blockchain Polygon, joined the company as the chief growth officer. So yes, kind of a bit of some tea there, where you generally don't see such high profile employees going from one layer 2 to another in such a manner. So Watkins has been credited kind of with assisting in some of Polygon's biggest partnerships, such as the ones between Polygon and Starbucks, Nike, MasterCard, Disney, Meta, and more. The hope or speculation among the market is that he will continue to forge these types of partnerships, only this time at Optimism. Optimism is, also at Dev Connect this week, which is in Istanbul. So, potentially more exciting announcements out of that project to come. With that, Optimism is up 21% for the week. All right, so last up, we've got a twofer. So this is a bit of a legal spat, or bit of a long story here, but I will do my best to kind of keep it short. So over the weekend, the bankrupt FTX estate announced that they're going to be suing the Bybit exchange to claw back $1 billion in assets, claiming that the assets were gained in a fraudulent scheme. So this lawsuit kind of has a couple moving pieces, dating back from FTX's collapse to recently Bybit's DAO's rebranding. So the lawsuit alleges that Bybit used its VIP status to withdraw hundreds of millions of dollars of assets from the FTX exchange the day before the collapse, with the account from the accounts of Bybit-related entities and senior executives. So definitely kind of playing favorites there. In addition, the suit alleged that Bybit held $125 million in assets owned by FTX, which it has refused to hand over to the bankruptcy estate. The third accusation, and this one's a little bit more complex, in the lawsuit relates to a token swap in late 2021 between FTX and BitDAO, the decentralized governance group spun out of Bybit, in which they two exchanged their FTT and BIT tokens. The idea being nice token swap to align incentives. So this was at the end of 2021. So earlier this year, BitDAO actually rebranded to Mantle and have shifted their focus to building a layer 2 blockchain and opened a token swap to convert the BIT token to the new MNT tokens. According to the lawsuit, Mantle/Bybit tried to reverse the original transaction from 2021, as the value of the FTT tokens were worth about $4 million versus the $50 million of BIT tokens that the FTX estate holds. The FTX estate apparently said no to this deal. Obviously, it was not in the best favor. It was not in their best favor. But shortly after, the token swap was opened for BIT to MNT tokens. When the FTX estate tried to swap their BIT tokens through the online portal, Mantle paused the swap contract and started a vote to block FTX from converting to these new tokens totally. So obviously, there's a lot of back and forth here on like what actually happened. We don't know if there was, the lawsuit has made it sound like the DAO is not actually as decentralized as it would seem, with a lot of the controlling power remaining with Bybit executives. And obviously, Mantle has tried to kind of, claw back some of the value that they gave away to FTX. And FTX, at the end of the day, we would hope that they're at least acting in the best interests of people who were affected, and they're trying to, get back as much money as possible as part of the bankruptcy, claims. This has obviously been, ongoing saga, and we'll continue to see how it goes. Mantle didn't really move much on this news. They're up about 6.1% for the week, pretty in line with the market, whereas the FTT token has soared 160% this week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.